Hi, I'm Mike Graham, president of Midwestern Securities and your host of Banking on Growth. With us today, we have our friend Chris Furlow from the Texas Bankers Association. Welcome, Chris.
Hey, Mike, thanks very much for having me on today. Really looking forward to our conversation.
Hey, you're welcome. We're glad you're here. We appreciate all the work that the Texas Bankers Association does for its members and the banking industry in general. Will you kick us off with telling us a little bit about yourself and the association?
Hey, you bet. I'm really proud to lead the Texas Bankers Association. As you had mentioned, we're the oldest and largest state banking association in the United States. Only American Bankers Association is older. It was founded by young bankers in 1885. They had seen what had happened with the formation of ABA and said, hey, we're Texas. We ought to have an association too. And so, since 1885, our association has been looking after not only the health of our banks, but certainly the health of our local communities across the state of Texas. And I couldn't be more proud to serve. I came to TBA about 6 years ago. I got into banking through risk management. I'd had a number of jobs in politics and in government and in business. And the role here at TBA just seemed to be a combination of all of those things over the many years. So I'm really excited to be with you here today and tell you more about what TBA is up to.
Fantastic. So I've been involved in a lot of different business organizations throughout my career. I've been a financial advisor and running a broker-dealer and registered investment advisor that works primarily with community banks in the Midwest currently for my career's coming up on 30 years. My experience of working with organizations like the Texas Bankers Association, from a consumer's perspective, they need to do two things, at least two things really, really well. One is business advocacy, right? They need to make the business environment better. Yeah. And two is help businesses grow, create business building ideas. So both of them are connected, right? The first one is about maybe removing some hurdles and making the industry smoother, more conducive place. The second is about that, but it's also about constructive business building ideas. Let's take these one at a time. Can you tell us about the TBA as far as what you're doing for advocacy for the industry in general, the consumer, the banker, the community?
Well, Mike, it is really a pivotal time for the banking industry, certainly here in Texas and across America, but particularly for our community banks. If you think about it, our banks have helped to sustain our nation's economy and local economies. Most recently, through the pandemic, one of the biggest shocks economically our nation has ever seen. But it seems like a lot of the folks in the political class and federal regulators have forgotten this really historic role that our banks played already. The regulatory burden is of great concern. Here we are still dealing with the aftershocks of COVID. We've had this period of high inflation, interest rates that went up like a hockey stick, and yet we still may see a recession. And with all of this in mind, it seems that our regulators are now coming in, introducing reams of new banking regulations to include social policy, what I would call experimentation in what they're doing. And, just behind me here, I've literally stacked up. This is the more than 5,000 pages of regulation that was thrown at banks in 2023 alone. That includes the Section 1071 Small Business Rule from CFPB. That was 888 pages. I believe it's close to 300 pages from the new data rule, 1033. It includes 1,500 pages in the new CRA rule regulation, and we can talk about that as well. But all you have to do is look at this stack and ask yourself, does that make it easier for a community bank to lend into the community, to lend to a minority or a women-owned business or a veteran-owned businesses, or does it make it harder? I guess as the lawyers would say, it's prima facie, right? I mean, we deal with an awful lot of zeros in the banking business, and the politicians in Washington deal with an awful lot of zeros. And at the end of the day, when you tell them 5,000, to them, that's not a big deal. But when you see that stack of 5,000 pages, and that is what community banks are dealing with when they're trying to help small businesses and families, all of a sudden it makes a big difference to see that stack. So I hope you don't mind. I've done that. By the way, those things are actually counted out, and that's my working copy of 1071 on the top. So, what we should be doing at this point in our history, especially given the environmental factors with the economy that I talked about, is focusing on safety and soundness in the banking industry. We've had to sue federal regulators 3 times in the last 2 years alone. That includes the 1071 final rule. That includes the new CRA reg that came out, the 1,500-page reg. And we were also a top-line plaintiff in the case against CFPB on their UDAP rule, which came out, and a federal judge threw that out. Why? Because they're not following federal law and understanding through APA the real impact of what all of these regulations do. And I would just say, the majority of the banks in this country are community banks, certainly here in Texas. And with the notable exception of Governor Mickey Bowman on the Federal Reserve Board of Governors, who has served as a community banker. She's been a state banking regulator. She's been a real voice for common sense. But with the exception of her, if you look across the board at the Federal Reserve, if you look at the OCC, if you look at FDIC, virtually none of those folks have served at a community bank. And yet they're making policies, these kinds of policies that are having a real impact on our banks, that are having consequences. And I think they fail to remember these are consequences not just on the bank. These are consequences absolutely in the community. So, it's something that we kind of get worked up about on behalf of our banks.
Well, you should. That's your job. And I'm glad you do, right? For our listeners who are will listen to this podcast on their drive home from work or something, the stack of paper is 3 feet tall behind Chris. Does 3 feet of more disclosure protect customers? Does it improve the financial systems? No. It stifles competition. It increases costs to comply. It increases legal costs. It increases risk of compliance and regulatory issues. It pushes banks out of business, reducing competition. If there's less competition, there's higher cost. The costs get passed to the consumer. The consumer is who pays the dues for well-intentioned politicians who are killing a bunch of trees and harming the business environment for community banks that customers need to expand their business, to buy a farm, to buy their home, to whatever they need to do to live out their dreams in the United States. So we're right there with you. We eat, sleep, and breathe community banks, and I love the passion and the advocacy that you have there. I think sometimes associations, organizations can think that advocacy is glad-handing. It's wine and dining and making friends, but there's a vigor in your voice that's more than lobbying.
Yeah. Look, this is again, as I said at the outset, I've got the best job in the country. I get to, on a daily basis, work with community banks who I see the real impact that they have in their communities and making the especially here in Texas, where our economy is so vibrant, really making things grow. And it's almost like Washington is trying to stop that, which is just insanity. If you think about it, Washington should really be listening to our community bankers. If you'll recall, over the last couple of years, over and over again, what did we hear coming out of the Federal Reserve and out of Washington? Oh, don't worry, inflation is just transitory. Inflation is just transitory. Well, our banks are in the real world. Our banks are not inside the Beltway. They're not waiting for that lagging data that the folks on Constitution Avenue at the Federal Reserve are always looking for before they make decisions. Our banks are seeing what's happening in real time. And when Washington had finally acknowledged that inflation was in fact not transitory, what did the Federal Reserve do? Then all of a sudden, rates were put on a hockey stick. Now that has you don't have to go to Harvard Business School to figure out that that's going to have an impact on banks, and especially on community banks, to have that type of shift take place so quickly. And now it seems like the regulators have been saying to banks, what are you going to do to mitigate the impacts that we've had on you? It's really nonsensical. And I think we saw that again last spring with what happened at Silicon Valley Bank and at Signature Bank. In my opinion, the regulators played a major role in those failures for a lack of oversight. And has anyone really been held accountable at the federal regulatory agencies? What happened was the regulators examined themselves. Can you imagine, would a regulator ever let a bank examine it itself after an issue? What we did see is the agencies offer these quick and frankly insincere mea culpas. No one has been held accountable. And then they pivoted quickly to implementing more regulations on our banks. I mean, you're thinking about the new capital standards and those types of things. And our view was simply, shouldn't we look comprehensively at what happened rather than taking the piecemeal self-examinations of these agencies? And so one of the things that TBA did in terms of advocacy, along with our 50-state association colleagues, is we called on Congress to have an independent third-party review of regulator contributions to the crisis. It had huge reverberating effects. So that, if we think about the multiple stools to the financial system, the banks are one, but so are the regulators, and there needs to be accountability. And we I can certainly go off for days, but I think that a lack of accountability within the federal regulatory agencies are now pervasive. If you look at CFPB, they will take an enforcement action, for example, against a bank on a cyber lapse, but they had a breach that exposed over 250,000 Americans' data. They would insinuate at CFPB that banks are somehow unfair, but they had a $6 million discrimination lawsuit that they settled. And they repeatedly break the law in terms of following the Administrative Procedure Act. And somehow they're claiming moral authority to hold banks and other institutions to follow the law. So, do you want to talk about the FDIC and that?
Yes.
Wow. Holy mackerel. You talk about, would a bank CEO with the kinds of problems that FDIC has had with its leadership, would that bank CEO still be in place, much less, as they did last week, push through a very precipitously a range of new policy issues? I mean, it's just astounding, Mike. I'm sorry to go on, but again, we're seeing something that there's a pattern here, and yet there's no accountability, and it's frustrating.
Sure. I think it was Ronald Reagan who said one of the scariest things you can hear is, "I'm from the government and I'm here to help."
That's right.
Right. And so left unchecked, things go too far. And what you're doing is advocating for your members and the industry and the benefits of a competitive marketplace that allows for consumers to have lower cost and access to capital and a safe banking system. So we certainly appreciate the fight that you have advocating, and are thankful for organizations like you.
And let me just say, Mike, we're not anti-regulation. This is not something where the guys down in Texas, they're always, doing their thing. But I mean, this just comes down to the fact that, our bankers realize we need a safe and sound banking system. We need for our customers to be protected. But at the end of the day, what we're seeing now is this shift to the politicization of banking. Banking used to be kind of boring, and now all of a sudden it's become kind of the plaything of folks in Washington, D.C. And really, I think, especially at this time, with the economy still being so uncertain, we need to stop the politicization of banking and have regulators follow the law as well as the banks. We need to put competent, experienced people, not ideologues, in charge of these regulatory agencies, people that can focus on fairness and safety and soundness rather than political agendas. And let's let banks get back to what they do best, which is, support families and small businesses and local economies. I mean, that's just common sense stuff, especially again now with where we are with our economy. It just makes too much sense, but Washington's not listening.
Well, we keep showing up, keep fighting the fight, right? Good work. Thank you. Let's talk about the second main focus of an association like this, in my opinion, and that is to create connections and growth opportunities. Can you tell us how the TBA views that?
You bet. Again, with having 400 banks across the state of Texas of every size, you want to talk about a network, right? And so TBA hosts probably over 60 different types of events every year, from our annual convention, which is in the spring. This last convention, we had over 1,000 folks who were there. Really exciting. But we also have very focused types of events, everything from our Ag and Rural Affairs Conference. We have, we call it Cyber Tech, which really focuses in on both cybersecurity and the opportunity side of technology through IT. And we have just tons of very role-specific opportunities for gatherings of CEOs and chief financial officers and COOs and risk officers, lending officers, and it allows them to meet with their peers. And anytime our association can provide a peer-to-peer opportunity, we do it. One of the best things that we probably do is every 2 weeks we have a CEO and senior management call. And typically, this last week alone, I think we had over 150 bank leaders on the call. This happens on a regular basis now. And we usually have a bank leader panel. And what it is, it's just a check-in. We all go to conferences and these things, and we go to the exotic locations and that type of thing sometimes. But nothing beats the ability to hear from your peers on a regular basis and to take the temperature of the quickly changing environment that's going on. And that's what I love about those CEO calls. So that's one of the ways that we do that.
Yeah, that's great. That's very valuable. What are some of the topics that you're hearing on the most recent series of those calls?
Well, look, everybody's been experiencing some issues with NIM. That's been a top concern. Hey, what's going to happen with rates? How are you preparing for, in some cases, if you'll recall, at the beginning of the year in January, folks were sure, hey, all the rates are coming down real fast, and everybody was getting really exuberant about that. And then what happened a few weeks later? It's like, it was like that horn on the Price is Right. So, having the ability for our bankers to talk about how they're managing through daily issues of late. We just had the huge incident that took place with the CrowdStrike episode. Having the ability for bankers to share information about how they work through that. Fraud is a major issue, along with cybersecurity for our bankers, especially here in the state of Texas. We've formed a fraud task force. And we recently had a fraud task force call that had almost 300 bankers from across the state of Texas. That's how bad the problem is. So we're working with legislative leaders, with our state Financial Crimes and Intelligence Center. We operate our own Cyber Intel Center, the Texas Bankers Information Sharing and Analysis Organization, our ISAL is what we call it. It's think of it as a cyber fusion center. And now we're putting it to work to help counter other crimes like fraud, like card skimming and the like.
Yeah, very expansive. I was listening to a podcast last night on my way home from work, and they were talking about banks' liability when consumers fall for an online scam. What are your thoughts about that topic? And does TBA have a perspective on what's buyer beware and what's the bank supposed to kind of quote bail you out on if you send money to a bad actor?
Yeah, I think this is one of the things that we need to communicate as an industry across the nation to elected officials. I think in terms of folks forgetting what we did on PPP, they also forget the fact that anytime that there's fraud, it's almost always the bank that makes the customer whole. They forget that actually has an impact. And our elected officials need to know and understand this. Because we're to the point now from a resource standpoint that law enforcement is having a hard time keeping up. Her name's Jan Mills. She's a tremendous community banker, $160 million community bank in Winsboro, Texas. She'll tell you that she experienced a $42,000 loss through a check fraud incident. Now, $160 million bank, that's a big deal. Unfortunately, for federal law enforcement, if it's not well into six figures, they're not even going to take a look at it. And so these are the things that we have to start working. We're now working very closely with our Financial Crimes Intelligence Center to bring them more resources. We're working with the legislature to increase the crimes, to say if the feds aren't going to pursue them, well, guess what? In the state of Texas, we'll make you famous. And so we're going to be working with our legislature and our lieutenant governor to ensure that we increase the penalties for financial crimes in the state of Texas. So being able to address challenges like that, oftentimes rise up very quickly. We need to be responsive, and that's our role at the association. Our job here can't be just to perpetuate the organization, and once a year a dues check goes out. We don't look at it that way here at TBA. Our job is to solve problems for our bankers. And if we're not doing that, we're failing, and we're not going to fail. We need to make sure that if somebody's going to pay dues at Texas Bankers Association, there's no doubt in your mind why you're sending that invoice back with a check.
Yeah. Sounds good. What do you hear about talent development currently in Texas, at building that next generation of leader inside of the organization?
Man, I tell you, Mike, thanks very much for raising this. This is something we put a lot of time, energy, and money into at the Texas Bankers Association. We're truly investing in the next generation. If you go across the state of Texas and, in talking with my peers across the country, the bank talent workforce has been a challenge. We're competing against everyone else for the best and the brightest. And what we've done at TBA is we like to say that hope is not a strategy. So I think in the past, our industry more broadly, you'd have some bankers write checks to universities and banking programs, and then we all hope something good happens and comes from that. We've been much more methodical about that here at TBA. First, we have a full-time vice president who his sole role is to liaise with our university programs. And it's been very successful in working on making sure that the needs of those students are met and the needs of the banks in terms of curriculum and the output from the students coming out, making sure that aligns with the needs that we have for our community banks. We're working with the major programs across the state of Texas, programs like Texas A&M, Texas Tech, which has a fantastic program up in the South Plains. Sam Houston State University was really the granddaddy of them all, getting the banking programs with Dr. Jim Bexley getting started. All in all, we're working with 17 universities. I'm particularly proud of what we've done on the minority banking side. We helped to seed the Texas Southern Banking Program, the premier HBCU banking program in the United States. We worked with our banks out in far west Texas at University of Texas El Paso. So we're making sure that we're looking truly to the future. Texas is becoming much more diverse. Folks are moving here by the thousands every day. And we want to make sure that our banking industry is prepared with the best talent, because at the end of the day, it comes down to what makes a community bank special. It's the people. We don't take our eye off the ball when it comes to that fact. And the only way you can do that is ensuring that you're giving it that type of care and feeding. And we funded close to $2 million in funding in these university programs. So putting our money where our mouth is as well.
$2 million into the system. That's fantastic. What's the annual spend on those topics? Do you have a handle on that?
Off the top of my head, but they mostly come in commitments, multi-year commitments to the universities. So in terms of $250,000 to A&M, $250,000 to Sam Houston and to Texas Tech, $100,000 to UTEP and to Texas Southern as they initiated those programs. But we're also committed to our graduate banking school, SWGSB, Southwestern Graduate School of Banking at Southern Methodist University. We're getting close to since the pandemic, nearly $250,000 into that program. And proud to announce it's actually coming out today. So this is breaking news, Mike. We're very excited to partner with SWGSB on the premier lending school in the country. So we're really, really excited about these relationships. You have to give them care and feeding, and it's one of the most important things that TBA does.
Excellent. I would love to learn more about the Graduate School of Banking down there. We were just myself and Ann Shutt, one of our VPs, was just at the Graduate School of Banking in Madison, Wisconsin earlier this week, and it's an invigorating environment. The people are just gaining knowledge, gaining confidence, and bringing that enthusiasm back to their community banks.
I mean, you know what I love about it? I love the fact that each class goes through and they are making friendships for life. They may actually compete against each other as bankers, but they're also going to be the folks they call for advice when they're not competing on something. They'll also be the folks who show up at major life events, or whether it's a wedding or it's sadly a funeral or something like that. These folks are building lifelong relationships in addition to becoming, in my opinion, the best bankers in the country. So we're happy to connect you with Dr. Bill Chittenden at Swigsby, where he would be a great interview for you as well.
Oh, we love that. Thank you. It's really interesting. We could, as you know, our home office is in East Peoria, Illinois, which we have a lot of community banks in Illinois also.
Hey, shout out to Randy Holtgren at the Illinois Bankers. He's a great friend, and for those of y'all who don't know, a former member of Congress. Boy, I sure wish we had his common sense back in Washington.
All right, awesome. So we're in Illinois, Indiana, Missouri, Kentucky, and Wisconsin currently, where our clients are of Midwestern Securities. There is a high percentage, Chris. I don't know the exact percent, but a very high percent, more than 50%, that of our banks that we work with, their CEOs went through a school like that. And so they're more progressive. They're ones who are interested in looking at non-interest income, diversifying their revenue sources, being more proactive in their marketplaces with potential acquisitions, with accelerated branching. It was just growth-minded, basically, is what I'm getting at. So the majority of the banks that we work with are growth-minded, and they have that commonality. They went through a school like that. I think it's also interesting. My observation is that most of the big changes that they had in their career and in their institution came within 5 years of them completing their graduation from a school like that. They come out with fresh ideas, again, invigorated and confident and ready to grow. I think personally, after coming back from this discussion this week, that every bank should have somebody coming out of a program like that at least every 5 years. Bring some enthusiasm back into the community banks.
Yeah, and I would tell you, so many of our banks here in Texas, the leadership actually pays for that up-and-comer, someone who's already a leader in their bank. They've been identified as, hey, this is somebody who's going to be in the C-suite if they're not already. That investment in just a few $1,000s and what the tuition may be annually for them going through it, for example, at Swigsby through a 3-year curriculum. Oh, wow, the return on investment, it's huge. And so and from my view, if I have a bank CEO come to me and say, hey, should I send someone through Swigsby? I said, it will pay you dividends. So absolutely send that person through for exactly the reasons that you're saying. It's for the new ideas. It's for the perspective they will bring. It will be the fact that they are charged up to be excited about banking because they've been around folks who have that same passion for community banking that they do. And it is exciting. So I share your enthusiasm for banking education.
Yeah, thank you. What else is important to the TBA right now? What are some things that are near and dear to your heart these days?
The things for us that we really have tried to focus on, and we've touched on some of them, I kind of look at how we solve problems for our bankers at 3 big buckets. And 3 of the main risk areas are clearly regulatory risk, which we touched on. Regulatory risk, unfortunately, we've had to sue the federal government. It's not that we want to do that. I assure you, I have a lot better things that we could do with that money than to send it through the legal system. But sometimes you've got to stand up and fight. And that, unfortunately, is one of the key things. So fighting regulatory risk is one of the things that we're doing right now through the courts. And obviously we do that through the legislative process all the time. Cyber risk, I touched on that we have America's first community bank, ISAL, Information Sharing and Analysis Organization. That's a member benefit at TBA. Banks don't pay additional for that. We pay for the platforms through which they share information and that type of thing. It's been a huge deal. Whenever SolarWinds was happening, for example, they were on the platform saying, hey, what are your vendors telling you? Because they know third-party risk management is an issue. When we recently had the CrowdStrike incident, they were utilizing the platform in addition to sharing information about nefarious activity that they see. So regulatory risk, cyber risk, and the third piece is competitive risk. How do we make our community banks more competitive? And on the innovation front is really one of the ways that we really want to make an impact. And we have a program here on innovation at TBA. We call the program the magnet. And what is the magnet about, and how is it different? Well, in our view, innovation is often driven primarily by the cores, by investment capital, and by the tech startups. And all of them have a primary objective, which is to get ROI as quickly as possible. Hey, it's just a basic business principle. Unfortunately, for a community bank, ROI in this space often takes a backseat to those other actors. And look, it's just not working for our community bank. So one of the things that we're trying to do because of the number of members that we have here in the state of Texas is really give them collective power together in addressing some of these challenges. In particular, making sure that companies realize that they're missing out on a market in community banks. Some of these tech firms won't touch banks under $2 billion. Their sales teams think it's a waste of time. Well, like I said, I've got hundreds of banks here in the state of Texas, and I have them in a collective now. And so it's almost like an agreement. It's like, hey, tech firms, if you want access to the market, we've got it. But you have to address the needs of our banks. That has to come first. It's not a square peg in a round hole. You'll get the return on investment for you and your investors, but you've got to first focus on the community banks. And this is a model that is really taking off for us. We have the capability for our banks, if they're a community bank, a small one, to come in and just learn from other banks in what they're doing. They can have access through our data platforms to find out, hey, what's on the market? I'm looking for this capability. What's out there? What are other banks using in this space? Where's the technology made? Data for decision making, so they're not just stabbing in the dark. And then we also have a build capability. If it doesn't exist and a group of community banks want to get together and share the cost to develop out a capability, we have the technological wherewithal to be able to actually build and develop technology. So we think that our model is a little bit different. Our innovation VP, Rich Perez, has just done a fantastic job. We're excited about the growth and where things are going. We call it, this is our way of innovating on innovation.
I love it. Love it. Well, this has been great. Is there anything else that you'd want our listeners to hear today, Chris?
Well, I'm just going to tell you, here we stand. We're just under 90 days left until the fall elections. I'm telling my bankers, if you want to see change, you have to vote. It's one of the key messages. We've got to get out the vote campaign. It's a nonpartisan thing. We just want to make sure that our bankers are registered to vote, that they make a plan to vote. They understand, for example, if there's early voting or if they need to have an absentee ballot, those types of things, or if they're going to vote on election day, that they've made a plan to do that. And then they actually follow through, that they're not distracted by that. Unfortunately, it's just the way things are. Politics is policy. And our industry has always kind of been very conservative. It's like, let's not get our hands dirty. But the impacts that we've talked about on this discussion today are very real. The people who get elected either choose the leaders who will be at the regulatory agencies, or they provide oversight. We need people who are actually going to, as I've mentioned earlier, listen to our community banks. These are folks with their finger on the pulse of communities all across America. They make America work. And so I just want to encourage everybody to please get out and vote for our industry and our communities.
Awesome. I've really enjoyed our conversation, Chris. If I was a community banker in Texas, I'd be right there with you. I'd be a member, and I'd want to be involved in leadership. I appreciate your vision and your passion and the work that you and your team are putting into this. So thank you very much.
Well, our bankers are the inspiration. Everything we do at TBA is all about them and all for them. So we're so grateful.
Awesome. Well, thanks again for being with us. To our listeners, thank you for joining us for this episode of Banking on Growth. From all of us at Midwestern Securities and Banking on Growth, until next time.
This has been another insightful journey with Banking on Growth with Michael Graham and Midwestern Securities, a member of FINRA and SIPC. We appreciate your time. If you found value in today's discussion, consider subscribing for more thought-provoking discussions in the world of finance. Your support helps us continue to bring you quality insights. If you have a topic you'd like us to consider covering or have thoughts on one of our episodes, we'd love to hear it. Just email us at media@midwesternsecurities.com. Remember, the power to grow is within you. Thank you for being a part of the Midwestern Securities community. Until next time, stay inspired and keep banking on growth.